Hello students, Accounting for Not-for-Profit Organizations, Lecture 10. In this video, I am going to explain about 10th problem from this topic. I am taking this question from Inter Second Year Telangana State Telugu Academy Accountancy Textbook. But this problem is useful to all commerce students who want to know about this topic. First 9 lectures videos links and this question are available in the description box. Let us see the question first. The following is the receipts and payments account for the year ended 31st March 2020. This is receipts and payments account. Debit side receipts, credit side payments. On receipt side, 2 cash in hand 1900 rupees, 2 cash at bank 20,000 rupees, 2 subscriptions 42,500 in brackets including for 2018-19 1500 rupees, 2 auditorium rent 1500 rupees, 2 interest on investments 4000 rupees, 2 donations 12,000, 2 sundry receipts 100 rupees. Payment side, by salaries 12,500 in brackets including last year 2000 rupees, by electric charges 2600, by telephone charges 1400, by printing and stationery 1500, by traveling expenses 2000, by rent paid 10,000, by books purchased 16,000, by balance of cash 1500, by balance at bank 21,000. Two sets total 82,000 rupees. Additional information. First one, subscriptions received amount includes 1000 rupees for the year 2020-21. Second, outstanding rent is 6,000 and printing 3,000 rupees. Third, the value of investments is 60,000 rupees and the rate of interest 8%. You are required to prepare income and expenditure account. Let us see the solution for this question. In question, he has given receipts and payments account. So with the help of receipts and payments account and some additional information, we have to prepare income and expenditure account. So heading is income and expenditure account of dash. We have to write the firm name here. In present problem, in whose books we have to prepare this income and expenditure account. Firm's name is not given. Therefore, we have written dash. For the year ending 31st March 2020. So current year is 1st April 2019 to 31st March 2020. For this period, he has given receipts and payments account in the question and we have to prepare income and expenditure account. In receipts and payments account, debit side, receipt side, he gives capital receipts, revenue receipts both. In income and expenditure account, only revenue receipts we have to show on credit side. Capital receipts means rare incomes. Revenue receipts means regular incomes. So only regular incomes, revenue incomes we have to show on credit side of this account. Similarly, credit side of receipts and payments account, he is giving payments. Payments are also two types: capital payments, revenue payments. In receipts and payments account, two payments will be given on credit side, but only revenue payments we have to take on debit side of this account. So revenue payments means repeated expenses and capital payments means rare expenses. Only revenue payments we should take in this account. And while taking revenue incomes and revenue expenses, he is giving some additional information also. That additional information also we should consider. So let us start with the receipt side. First one, cash in hand 1900 rupees. This is known as opening cash balance. Opening cash balance doesn't appear in income and expenditure account. In previous year balance sheet, as an asset we have to show that amount. Not here, therefore ignore. Next, cash at bank 20,000 rupees. So this is known as opening bank balance. Opening bank balance also in opening balance sheet. Nothing but in previous year closing balance sheet under asset side we have to show. Not in this account, so ignore. Opening cash balance, opening bank balance. Both we have to ignore while preparing this account. Next one, subscriptions 42,500 rupees. Subscriptions means what? We are running one not-for-profit organization. So this organization contains members. These members, to continue their membership, regularly they have to pay some amount to the organization. That amount is known as subscription. So regularly members are paying, means this is repeated income, means revenue income. Revenue income we have to show on credit side now. Therefore, subscription amount we have to show on credit side of this account by subscriptions. Adjustments are given, therefore amount in inner column 42,500 rupees. In receipts and payments account, in brackets he is giving some information. If any amount is given in the brackets, then the meaning is it is given in the adjustment. Including for 18-19 year 1500 rupees. We are preparing this account for the period of 19 and 20 now. So current year is 2019-2020. So 2018-19 means previous year. So previous year subscription amount is also included in this subscription amount. Last year amount we should not show here, because why we are preparing this account? To know the surplus or deficit of current year. If you want to know the surplus and deficit of 2019 and 20 year, only 2019 and 20 years related expenses and incomes we have to show in this account. If any last year amounts are included or next year amounts are included, then we have to subtract them. Therefore, previous year amount we should deduct minus previous year. Previous year subscription amount 1500 rupees. Remaining amount also in inner column only, because one more adjustment he is giving. Where? In additional information. First point, subscriptions received amount includes 1000 for the year 2020-21. 2020 and 21 is next year now. So next year amount 1000 also included in this 42,500. So next year amount also we should deduct. Therefore, minus received in advance 1000 rupees. Related with subscription, only these two adjustments are given. We have taken them. Then final amount in outer column we have to write, because there is no further adjustment related with subscription. So 40,000 is current year subscription amount. Only current year income we have to show in this account now. So 42,500 is the total subscription amount which is received in current year. But in that 42,500, 1500 income belongs to last year, 1000 rupees income belongs to next year. So these two amounts we should not consider while preparing income and expenditure account. Therefore, these two amounts we have subtracted from this current year received amount 42,500. So the income for current year is 40,000 rupees only. Show that amount. Next, auditorium rent 1500 rupees. He has given auditorium rent on receipt side of this account. So receipt side when he is giving, then the meaning is firm is receiving this rent. So we should understand that this firm has one auditorium. They lent that auditorium to outsiders and they received rent on that. So this is repeated income. Therefore, we have to show on credit side. So you may get one doubt, that is, on what basis you are thinking that regularly firm lends that auditoriums? So it may be a rare income, it may be a capital income. In previous video also explained, if it is capital income, where it appears? In balance sheet under liability side it appears. So you have to observe whether it is a liability or not. So auditorium rent is not a liability. If it is capital receipt, it should be a liability now. So liability means bank overdraft is a liability. Capital is a liability. But auditorium rent means we received rent. So this rent is income to us and we need not to pay this rent to any outsider. We are not liable to anybody related with this rent. So it is not a liability. Means it is not a capital receipt. Then what is left? Revenue receipt. So if you get any doubts like this, whether regularly we receive this income or rarely we receive this income, if you get this type of doubts, then apply this technique. If it is a rare income, it should be a liability. So auditorium rent is not a liability. Therefore, it is not rare income. It is regular income, revenue income. We have to show on credit side. By auditorium rent, there is no adjustment. Auditorium rent 1500 in outer column. You may get one doubt. Adjustment number 2, outstanding rent 600. It is related with auditorium rent? No. So this is related with expenditure related rent amount. Payment side also, he is giving rent paid 10,000 rupees. So this outstanding rent which is given in the adjustment belongs to that expenditure, rent expenditure, not this auditorium rent income. So related with the auditorium rent, there is no adjustment. Therefore, amount directly in outer column. Next, interest on investments 4,000 rupees. Firm invested some amount in outside securities. To the firm, that is an asset. So on that investment, firm received interest. So regularly this interest income comes, means this is regular income, means revenue income, credit side of income and expenditure account. And related with this interest on investment, there is one adjustment also. Adjustment number 3. The value of investment 60,000 rupees and the rate of interest 8%. So when he gives like this, investment value and rate of interest, then what we should do is, in rough notes, we have to find out how much interest should come. Investments value 60,000 rupees, on that 8% interest should come. 600 into 8, 4,800 rupees. So total interest on investment should be 4,800 rupees. But see on receipt side, interest on investment amount is given as 4,000 rupees only. So we should understand that 4,800 should come, but only 4,000 rupees came. Means 800 is income to be received, interest to be received. Okay. So total adjustment clearly we have to show in the inner column. By interest on investments. In inner column, first you have to show the received amount, 4,000 rupees. More 800 should come. So that 800 we have to add to this 4,000 rupees. Plus to be received 800 rupees. How that 800 rupees came? Clearly show here. Investments value 60,000, on that 8% interest is 4,800. In this 4,800, only 4,000 rupees we received in current year. So more 800 should come. This 800 is appearing here. Now if you add these two amounts in outer column, 4,800 is the final amount. Okay. Next, two donations 12,000 rupees. Donations. So some donors has given some amount to us in the form of donation. Donation is of two types: specific donation, general donation. If the purpose of giving the donation is clearly given in the question, that is specific donation. Specific donation is always capital receipt. Means in balance sheet under liability side we have to show. If the purpose of donation is not given in the question, then it is a revenue receipt or capital receipt. On what basis you have to decide? If amount is small, you have to treat it as revenue income. or revenue receipt. Means you have to show on credit side of this account. If amount is huge, we have to treat it as capital income, means we should ignore. Okay, so as a student you cannot decide whether amount is small or huge. Therefore, you can treat this income as revenue income or capital income. So at the end of the problem, you have to write down a note related with this. Donations are treated as capital income or donations are treated as revenue income. Here, donations amount is 12,000 rupees. So I am considering 12,000 rupees as huge amount. So as this is huge amount, we treat it as capital income. Capital incomes appear in balance sheet now under liability side. Therefore, while preparing this account, we need not to show that. So there is no rule that compulsory you should treat it as capital income. You can treat this donation as revenue income also. If you treat it as revenue income, credit side you have to write by donations 12,000 rupees. And we have to mention a note. I am treating donations as revenue income. Okay. So I want to treat this income as capital income. Therefore, I am ignoring. Next, sundry receipts 100 rupees. Sundry means various. So various small receipts. This is revenue income. Credit side it appears. By sundry receipts. With this, debit side, receipt side completed. Then come to payment side, credit side. Under payment side, he gives capital payments, revenue payments, both. Only revenue payments we have to show on debit side. While showing that revenue payments, adjustments also we should consider. No? First one is salaries, 12,500 rupees. Salaries we pay to employees. Regularly we pay. Means this is revenue expenditure because recurring expenditure. It appears on debit side of this account. To salaries. Related with the salaries, there is an adjustment. Therefore, salaries amount in inner column, 12,500 rupees. In brackets, he is giving, including last year amount, 2,000 rupees. So last year, firm has to pay 2,000 rupees salary. That amount is paid in current year. So that 2,000 is also included in this 12,500. You know, we are preparing this account to know the current year surplus or deficit. Therefore, only current year expenses, current year incomes we should consider. If any last year amount is included in current year amount, we should deduct it. Therefore, last year salary we have to deduct minus previous year salary amount 2,000 rupees. Then the remaining amount in inner column or outer column. To judge that, adjustments once we have to see. There is no additional adjustment related with salary. Only one adjustment we have. Therefore, final amount in outer column 10,500 rupees. Next, electric charges 2,600. So this is repeated expenditure. Every month firm has to incur this. This is revenue expenditure. On debit side of this account it appears. To electric charges. Adjustment is not given. Therefore, amount in outer column. Next, telephone charges 1,400 rupees. This is also regular expenditure. Every month firm incurs this. So debit side of this account. To telephone charges 1,400 rupees. Next, printing and stationery 1,500 rupees. Printing and stationery is also repeated expenditure. So debit side. Printing and stationery. Adjustment is given. Therefore, printing and stationery amount 1,500 in inner column. Adjustment number 2. Outstanding rent 600 and printing 300 rupees. So outstanding printing expenditure 300. Outstanding expenditure means we have to pay. So this is related with the current year. Current year amount we should add. Therefore, plus outstanding 300 rupees. So total printing and stationery expenditure for current year is 1800 rupees. In that 1800, 1500 we paid and 300 we have to pay. As we prepare this account on accrual basis, not only paid amount, payable amount also we should consider. Similarly, not only received amount, receivable income also we should consider. So we are adding 300 rupees here. Next, traveling expenses 2000 rupees. This is regular expenditure. So debit side of this account. To traveling expenses 2000 rupees. Suppose you don't know that it is a regular expenditure. So you have a doubt. Traveling expenditure is regular expenditure or rare expenditure. Then we have to apply the logic here. If it is revenue expenditure, debit side of this account it appears. If it is capital expenditure, it appears as an asset in balance sheet. So you have to observe whether it is an asset or not. Traveling expenditure is not an asset. Asset means furniture, books, machinery, buildings. These are known as assets. Traveling expenditure is not an asset. It is not a property to us. Therefore, it is not capital expenditure. Then what is left? Revenue expenditure. So on that basis also you can decide whether one expenditure is regular expenditure or rare expenditure. Next, rent paid 10,000. So every month we pay rent. Therefore, it is revenue expenditure, debit side of this account. And related with rent, there is one adjustment. Therefore, amount in inner column. Adjustment number 2. Outstanding rent 600. Outstanding means we have to pay. We should add plus outstanding 600. So total rent for current year is 10,600. In that 10,000 we paid, 600 we have to pay. Next, books purchased. Payment side is giving because we purchased books and we paid money, cash is going, so it is a payment. And books purchase is capital expenditure. So books purchases come under asset. Books are assets, but newspapers, magazines are not assets. If newspapers are purchased or magazines are purchased, you have to treat it as revenue expenditure. So debit side of this account we should show them. But if books are purchased, you have to treat it as capital expenditure and it appears in balance sheet under asset side. So don't show books purchasing income and expenditure account. Ignore. Next, balance of cash 15,000. Balance at bank 21,000 rupees. These two are known as closing cash and bank balances. So closing cash balance, closing bank balance. These two are assets for current year. So in current year balance sheet, under asset side, we have to show these two amounts. So these two are balance sheet items. We should not show them in this account. Ignore. Now, even adjustments also once we should observe whether we have taken all the amounts or not. Yes, 3 adjustments are given, 3 points we have considered. So everything is completed. Finally, we have to find out the surplus or deficit. For that, you have to observe these two amount columns totals. Credit side amount column total is more. In rough notes, you have to find out the total of credit column. Credit total is 46,400 minus debit total 28,900. Then the difference is 14 minus 9, 15 minus 8, 7, 3 minus 2, 1, 17,500. So this answer is surplus because credit side we wrote incomes, debit side we wrote expenses. Income is more than expenditure. Therefore, the difference is known as surplus. Way to show that amount? Debit side total is less. Therefore, debit side we should show this. To surplus 17,500. Then two sides you have to put the totals. Which amount? Credit total is more. So two sides you have to write that amount. 46,400 rupees. Two sides we have to put the totals like this. So this is all about 10th problem from accounting for not for profit organizations topic. So hope this video is useful to you. Thank you.